With some of the higher yielding or even ultra higher yielding ETFs these days, there's the potential to earn a ton of income, a massive amount of income, with a relatively small amount of money invested. I mean, heck, across my portfolio right here, as you can see, I even personally hold on to some random positions like TSLY ETF, for example, or even something like SVOL, which are going to pay upwards of 5 to 10 times more than what you would get across the normal market. Now, some of these ultra high yielders are, of course, extremely risky, some more than others, but in today's video, we're going to go over how a $30,000 investment could potentially earn upwards of $2,400 to $2,500 per month in income. Now, before we even go over that, I of course want to make it very clear that investing a substantial amount of money in anything that's promising to offer that much income probably comes along with a lot of risk. So of course, invest at your own risk, but let's get into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, like I sort of touched on, these days there are so many of these different ETFs, just like the one we're talking about for this video, CONY, the YieldMax Coin Option Income Strategy ETF, that offer distribution rates or yields that seem absolutely out of control and astronomically higher than what you're normally going to find across the normal market. And this is of course because you can't really compare an investment like this compared to the normal markets, because the fund managers are doing things that are completely different in order to earn distribution rates like these. But the honest reality is that we're not in the 1990s anymore, and there are different ETFs these days that have actually offered a positive total return over the long term and have offered investors a massive distribution rate, at least as of so far. Now, the reason I wanted to go through this thought exercise and show you guys how just $30,000 invested into CONY, for example, could achieve potentially $2,400-ish per month is because although I'm not personally a huge fan of the YieldMax ETFs, I own a small amount of CONY, abbvie, and TSLY, but for the most part, I've steered clear away from these ETFs, not because they're bad, not because they're good, but just because they don't really match exactly what I'm looking for in my investment objective. But that's not to say that some investors out there that are trying to achieve a massive amount of income couldn't have some fun with these or potentially even complete their portfolio. Now, to go over some of the basics, CONY references Coinbase stock, which is ticker symbol COIN. And then with the unique strategy that YieldMax uses and through options, is able to earn a ton of premium and a ton of distributions for investors. Now, the first thing that's obvious is CONY's distribution rate, which is 102+%. This means that in theory, at least, if CONY just traded sideways for the next year and paid out this much as far as distributions go, CONY would 100% pay back your entire investment in the first year, and then whatever you earned after that could be completely profit. Now, of course, who knows if that could even happen? The distribution rate is somewhat volatile, which I'm going to show you here in a second. Now, the distribution rates as of recently, we have $1.10, $1.04, $1, we have $1.50, $1.69, and then back in May and April, we saw $2.28 and almost $2.80. This is all for an ETF that cost around $12, $13, $14 per share. Now, of course, there's going to be a catch when it comes to this. There's no such thing as a free lunch. Investing into something like this is going to bring upon some massive risk. And this is, of course, if the underlying decides to absolutely drop in value fast. But to be fair, anything can happen with any investment throughout the stock market. Now, just to do some very basic math, in a number of months, you're starting to get to the point where you're earning back a large portion of your initial investment, which is honestly crazy. But unfortunately, even with those massive distributions, at least up until this point, it's not all rainbows and sunshine. This ETF CONY that's offering investors 100+% distribution rate has a minus 31.62% on the 1 year as far as their ETF price. And as of right now, as of filming this video, we're pretty close to the all-time lows for this ETF. We're up $1 or so from there. Now, in the max time frame, it's more or less the same. This ETF is down around 23% on the max time frame. It started off trading at around $18 per share, and now just a year and some change later, we're sitting at around $13 per share. Now, I've explained a lot of times in the past why these ultra high yielding ETFs seem to NAV decay and seem to just keep dropping down to the right over time, even while still paying massive distributions. And that has got to be one of the biggest risks when it comes to these sort of ETFs. Now, there's a lot of income-focused investors that say, that will argue, even if you're buying into something like this that's trading down to the right over time, if you take some of the distributions and buy more shares of it and lower your cost basis, over time, it's going to even out and you're still going to have a positive total return in the long term. And honestly, a lot of times that's not the case. Sometimes it is the case. But CONY, for example, it 100% is the case. The amount that CONY has dropped since inception, 23% or so, has definitely been outweighed by the massive distributions this ETF has paid over the last year or so. Now, to be more specific, these numbers are all estimated, but a $10,000 investment into Coney, even with the massive decay as far as ETF price, you would still have returned, with distributions being reinvested, around 90% total return, or an average annual total return of around 76%. This is over around 1.2 years. Now, with distributions being spent along the way, you're still talking around 80 or 60%. Either way, no matter how you want to cut it, Coney has outperformed the S&P 500. Coney has outperformed a lot of the stocks, almost all the stocks in my personal portfolio. Not to mention, because Coney currently as of right now is around $13.20 per share as of filming this video. That means with a $30,000 investment, an investor could potentially purchase around 2,272 shares of this ultra high yielding ETF that as of right now is offering a 102% distribution rate. Now, the only hard part to really know exactly how much this could earn an investor is that the distributions are not the same. But even going off of one of the lower distributions, this means an investor in theory could earn around $2,500 per month with a $30,000 investment into something like Coney. Now, the risk is definitely there with any style of ETF like this, in my opinion. And of course, only time will tell. I personally thought that this ETF was going to do much worse than it has over the last year. Because besides the fact that it's down around 23%, and none of us really want to see any of the investments inside our portfolio drop in price, this ETF has paid massive distributions that, in my opinion, have made up for it. So will I personally be buying any more shares of Coney? Like I said, I think I do have a share or two in my portfolio. Now, as of right now, I've honestly been thinking about grabbing a few shares as a more or less gamble position, but would I personally ever build out my entire portfolio with different ETFs like these yield max ETFs, etc.? Well, I personally 100% would not. And once again, that's nothing against these ETFs. They just don't really match exactly what I'm looking for in my investment objective. But the truth is there, Coney does have a positive total return in the long term if you look at total return being the metric. And Coney does have the potential to turn a smaller portfolio, say $10,000, $20,000, $30,000 invested, into a cash generating machine. So even though there is the reality that ETFs like this, like Coney, could potentially earn you hundreds if not thousands of dollars per month in income because of the massive distributions. I just want every investor out there to know that these ETFs, along with anything else in the stock market, come with their own risks, and especially when it comes to these yield max ETFs, if you're not a big fan of the underlying, which in this case is Coinbase stock, if you're not a big fan in that, then you probably are not going to be interested in Coney, and that goes for basically every single one of these ETFs along with others. But regardless, the math is pretty crazy and definitely fun to at least talk about, to theorize how much money there is to potentially be made. So now that we talked about Coney, we went over the total return for this ETF, and we even talked about the fact that this ETF potentially could make an investor a ton on a monthly basis with around $30,000 invested. I lastly, most importantly, want to hear from you guys down below. Would you personally ever own any shares of Coney in your portfolio? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.